It's time, says the Bank of England, to talk about the economy shrinking. Time to hike interest rates and try and get a grip on inflation.
Everything is much more expensive, especially when you go into the shops and you start buying stuff you would usually buy and you notice it.
In Paisley Town Centre, they're saying what people are feeling across the country. Prices are soaring, and the Bank of England believe this cannot be business as usual. So interest rates are up to 1%, which is historically relatively low, but still the highest rate since 2009. And it comes with some gloomy forecasts from the Bank of England. Inflation was at 7% in March. They say that's intensified because of the war in Ukraine and will hit 10% by the end of the year, which would be a 40-year high. And they're expecting household energy bills to go up another 40%, another £800, bringing the average bill to £2,800 in October. The bank's warning the economy has lost its sparkle and will shrink in the last 3 months of this year and overall next year, rather than the growth they previously predicted. All while households have more to pay out. Inflation, 10% by the end of the year.
It's terrible, considering it's already went up and then it's going up more.
The energy bills on average are going to go up 40% in October.
Okay, that's quite bad.
And incomes are nowhere near keeping up.
It is a measure of the scale of the shock that total real household disposable income is projected to fall by 1.75% in this 2022, which, apart from 2011, would be the largest contraction since comparable records began in 1964. And I must say that I recognise the hardship this will cause for many people in the UK.
But I think lots of people will be thinking to themselves, how am I going to cope with this? We've already in April seen record increases in energy bills. People are already seeing food prices go up when they're going to the shops. And actually what we're hearing today is things are going to be getting much worse.
The rate rise means 2 million households on standard variable mortgages may be facing higher payments. And with banks under no obligation to pass on higher interest rates to savers, money watchers say don't assume your savings account will automatically get a boost.
Mortgage borrowers will likely see an increase to standard variable rates at a much quicker pace than savers will see the benefit of a base rate rise. And that's why it's important that you're monitoring your savings rate, that you're not being loyal if the rate's really terrible.
The Ukraine war has contributed to higher costs for fuel, energy and food, but even before that, prices were climbing. Milk is up 10% and popular brands have increased prices, including this iconic Scottish beverage. So what could fizzy drinks teach us about inflation? Well, for many economists, the idea is that by putting interest rates up, the cost of borrowing money goes up. And so demand from consumers may go down and bring the cost of products down and inflation with it. But fizzy drinks teach us that the cost of materials, production, ingredients is all going up anyway, driving up the costs for consumers. That's why some economists warn raising interest rates won't be that effective, given global price rises. There's a fear now that the cost of living crisis will drag on, cutting into growth. Baz and Leo want to hire a new barber, but the prospect of 40% on energy bills in October isn't helping. How does that sound?
It's going to be harder, because the more they're putting prices up, the more we're going to be charging customers. And it's going to come to a point until people start doing their haircuts in the house, you know what I mean?
So in the months ahead, prepare for the economy to shrink as costs grow and the hurting to continue.
Well, earlier I spoke to the bank's governor, Andrew Bailey, and I put it to him that by raising interest rates when people are already facing the biggest income squeeze in a generation, the bank was making a bad situation a whole lot worse.
Well, we're doing this, I would say, very carefully, and the reason is because of what would be even worse is if inflation goes up even further than we are, unfortunately, saying it will during the course of this year. That would put an even bigger effect onto people in this country. But the thing that is most telling here is that the shock, or the series of shocks that we've been seeing, because they're predominantly coming in from outside, are having an effect, a negative effect on real income in this country, on people's real income in this country. And that is, we think, going to do, unfortunately, most of the work to, in a sense, unfortunately, in a sense, it's going to have a negative effect on incomes, but it is going to bring activity and inflation down.
So a lot of it is beyond your control?
Yes. And so, but our response to that, in terms of what we do on top of that, is very carefully calibrated to say, after taking that into effect, what, do we need to do something more? And that something more really has to do with the other thing that's going on in this country, interestingly, is that we do have a very strong labour market. That in itself is a risk, because I go around the country talking to firms, and they're very focused on is, how do I hire enough people, and how much is it going to cost me to hire them?
Well, you've talked about the risk of inflation, and obviously you have this mandate to keep inflation to 2%. So is controlling inflation more important to you than avoiding a recession? Is inflation the kind of lesser of two evils here?
For us, it's about a balance. So we have a price stability objective, but we have to be very careful here, because it is a medium-term objective. We can't cancel out every shock that happens, and we try to, we seek to pursue that objective by, at the same time, avoiding unnecessary volatility in output.
The figures don't suggest a technical recession, but put it in plain language that people will understand. A recession is odds on now, isn't it?
Well, it's a very weak profile. It's as you say, there is a...
Put it in language that people understand.
There's a technical definition of recession in this country, which is 2 successive quarters of negative growth. We don't have that in the forecast. What we do have is a very low average level of growth in the forecast.
So recession is odds on?
No, I'm not saying that. What I'm saying is it's a very weak forecast. And there are a couple of points at which it may be negative.
It'll feel like a recession as we know it from previous recessions.
It's going to feel like a big downturn in growth, that's true. But I'm afraid that is a consequence of the very big external shocks that we're seeing.
And bearing in mind everything you've said on inflation, you've again urged restraint on pay rises. But when people are struggling with higher food prices, with higher energy bills, and now interest rates, they've got no option but to ask for a pay rise,
Can I just put in a little bit more context? And it's about wages and prices, by price setting. It's a fact that, of course, those on lower incomes consume, by necessity, a larger proportion of their consumption is essential goods, obviously. And unfortunately, it's a fact that with this inflation we're seeing, more of the things that they consume are going up more rapidly. And the thing that I just want to emphasise is that when we think about those who are fortunate enough to be able to bargain high wage increases, I would just say as a society, please think about those who can't do that.
So if you were offered a pay rise, as a very high earner yourself, you'd turn it down, would you?
Well, actually, I have turned it down.
Have you?
Yes.
How much of a pay rise were you offered?
Well, the Bank of England had an across-the-board pay rise for its staff of, it's 1.5%.
And
you said you've got to do your bit to curb inflation.
I don't. I just want to be clear. I don't decide my pay. Our board does. A board asked me, and I said, I think the best thing is that I don't do that. I'm not saying, but please think, I don't want to preach to people about what they should and shouldn't do. That's what I thought was right for me.
But you're leading by example.
Well, leave other people to judge that, if you don't mind.
Do you have a mortgage? Will this hurt for you, this decision today?
I'm fortunately old enough not to have a mortgage. There can't be many good things about getting older, but no, I haven't had a mortgage for a little while.
You talked about a narrow path that you're treading, trying to avoid horrendous inflation, but on the other hand, trying to make sure you don't tip the country into recession. It sounds like an absolute nightmare. Now, I know as a central banker you don't do emotion, but does that keep you awake at night? Does the cost of living crisis give you a nightmare?
Not literally, but it consumes, as it should do, by the way, as the governor of the central bank, and a very large, inordinate amount of my time, as it should do. I mean, I'm utterly focused on this because it is a very serious situation we face.
You don't have a mortgage, you have turned down a pay rise. Do you feel the pain that people are going through out there?
Yes, because I take my job extremely seriously and the responsibility that goes with it. I mean, I'm utterly focused on ensuring that we get, the best outcomes for people in this country. I'm a public servant. Public service has been my life and this is my job at the moment.
Governor, thank you very much.
You're welcome.